Welcome everyone. Thank you for joining us on our webinar today, Microsoft News and Views, looking at the licensing and roadmap strategies of Microsoft. My name is David Blocks, I'm the Marketing Manager at SoftwareONE. Joined today by Tony McElworth, who's our Head of Microsoft Advisory Services here. Before I hand over to Tony, just to go through some housekeeping rules. You may have noticed as you join the call, you've been set on mute. This just to ensure the sound quality remains at an optimum. We don't have time for Q&A at the end, but what I'll do is we'll be handing out the slides and sharing the recording as part of this series. So if you do have any questions or queries, please follow up with your SoftwareONE account manager, or indeed Tony, or indeed myself when I send the follow-up email. So thank you for joining us today, and I'll now hand over to Tony.
Hi guys, thanks for joining the call today. It's part of a new kind of more regular series we're going to be running, giving our customers a regular update on some of the Microsoft compelling events around new technologies or principal licensing changes. Obviously there's a huge release cadence from Microsoft, so hopefully you can help you guys keep on track of it and start thinking about how you can get ahead of some of these developments to take advantage of opportunities for your own respective organizations. We're going to be looking back over some of the principal changes and updates over the last couple of months. So hopefully we'll just kick off now. So in terms of kind of giving you guys a view of some of what we're seeing as some of the strategic direction of Microsoft at the moment, and some of their priorities we're seeing come across with our place in the market, obviously transacting and advising on large volumes of Microsoft contracts locally and globally. First thing I really want to kind of impart for you guys really is there's a real strategic focus on control of the identity layer. Microsoft have had quite quietly kind of taken a huge global market share in terms of owning the identity layer with Active Directory, but it's something they haven't really capitalized on in some ways in the past. I really see identity as central to the success of Office 365. It not only is giving you that cloud-based identity, but also it's enabling a lot of features across the solutions and services stack. This is impacting everything from the MDM to mobile application management solutions in Intune, to extending information rights management or data loss prevention features in, say, Outlook. So really, it's really kind of a key pillar for Microsoft, and I wouldn't underplay the strategic importance of owning the identity layer, either within Active Directory or more prominently within the Enterprise Mobility and Security Suite, or EMS. We're seeing Microsoft really position themselves as the go-to cloud identity broker with extending single sign-on services and trying to set themselves as a brokerage between for your business to not only Office 365 services but also to a large partner ecosystem from Salesforce to SAP. So there's a real opportunity for Microsoft to insert a SSO layer with the Azure really facilitating that connection, and then ancillary services around security and analytics to be able to really take control of how your users are accessing cloud services, to be able to put in those organizational controls and then have that visibility for your business, whether or not it's access to LinkedIn or official corporate applications, and then being able to enable single sign-on and controls there. We're also seeing Microsoft really capitalize now on a move from that traditional on-premise software model where you went to Microsoft, bought a product, and then departed and came back to spend when you were ready to upgrade. Microsoft has slowly enabled an annuity business through the evolution of their software assurance model. But really now we're starting to see a real maturity in this, with either move to Office 365 services on a subscription basis, but also even on-premise solutions having a back end which is cloud supported, whether that's through security and patching updates. but also ongoing feature updates with a very rapid release cadence on a service branch model. And we saw this originally announced with Windows 10, and then the announcement of the consumer, but also current branch for business and long-term servicing branch options. But also we've seen this now extended with not only that connection to the System Center Configuration Manager with active service branch approach with new releases that need to be kept in line. So we have found customers kind of caught out by the fact that they've got a Windows 10 roadmap, but to move to Windows 10 is on their roadmap, but they haven't necessarily thought about moving to System Center 2016 to make sure they can run the latest builds of Windows 10. And also we've got things like Office having ongoing feature updates with new ones just being released now to the Insider release circle. But also Windows Server 2016 also, and System Center obviously being on, again, a server branch model. So it's something we're really seeing, and it's really, Microsoft are really going to be solidly locking in their customers. But also it means there's a huge interoperability and interdependency across their stack. So it's not seeing as products in silo anymore. Really you have to take that wider view to check for dependencies across your wider organization. It's not necessarily taking workloads in silo. So think about a larger program of work around Microsoft when you're identifying not only your roadmap and upgrade programs, but also your ongoing licensing strategy, so you can have a holistic approach and hopefully save money by taking that wider view. We're also seeing, of course, this blurring. I was asked recently by one of our Oracle leads what the split between desktop and server side was in terms of the Microsoft portfolio. And the original view was, look, I'm guessing it's something like 25% application, 75% server. I said, well, actually, if anything, it's getting more blurred. The Office, Office has a cloud backend, Windows has a cloud-supported backend. You've got the extensibility into Cortana and telemetry data being sent up to the Microsoft Cloud. You've also got a common data platform sitting behind these services enabled by the Office Graph. So really there's this common data layer behind. So there's a real blurring between on-premise and cloud service. We're also seeing things like Office, as I've said to some of you guys before, where we met on site. I said, like, Office in itself isn't a silo. It's really like a traffic light that's getting switched on by cloud services, whether that's the Skype for Business service or Exchange. But even now, it's going to be feeding into Azure AD in terms of Intune, in terms of information rights management, to an enablement of that within the Outlook client. So really, it's very much a blurred conversation these days, and there's certainly an interoperability around switching on with Office 365 services and the Azure AD layer as well. The telemetry data is something that really Microsoft haven't done a particularly good job in communicating. Recently we had a briefing call around Windows 10 over the concern about telemetry. So you'll see some more information on TechNet about what is actually being disclosed. If you want to control that telemetry data, you actually have the option in Windows 10 Enterprise to actually profile what telemetry data is submitted to Microsoft. If I'm honest, I'm not entirely sure whether or not that's going to the European data center. I think some services may be actually going out to the US, so it's something you need to clarify very much with Microsoft. For instance, Upgrade Analytics, which is currently in kind of not in full production at the moment, is really taking the Windows telemetry data to give you a really informed view of your Windows 10 upgrade readiness. But apparently that analysis engine is sitting in the US, not in Dublin data center as it currently stands today. That said, it's developing fast, and there's going to be a UK data center with 2 UK data centers have gone live up in Durham and down in London as well, and that's gone live now. So it's very much supporting governmental concerns and NHS concerns around data sovereignty. Because there's this common identity layer, Microsoft have really moved in, and this telemetry model, Microsoft have moved into security, incident, and event management. They're positioning it as more secure, but really it's more about taking advantage of their acquisitions in machine learning and their Power BI dashboard functionality to provide additional insights into, and analytics into security events across your network. And this is starting from the ground up in Windows 10 with Windows Defender, the extensibility into the Azure Security Center with Windows 10 Enterprise E5, with Windows Defender really feeding that data telemetry in. And you can take advantage of the advanced functionality within the EMS suite to look at sort of analytics around how your users whether or not there's threats on your network, or usage analytics to identify trends and threats. So really it's moving into a new space, but they're using Windows 10 and Windows Defender to really displace at the basic OS level, and combining that with the fact you're already moving to AD anyway in Azure to drive that competitive advantage. We've already seen a complaint this week raised by Kaspersky, so there are already questions around anti-competitive behavior. So we'll see how this evolves, and Microsoft's very bullish in their move into this space at the moment. And you're going to be getting access to these technologies because, not primarily because you're looking at Microsoft for security, but because you're looking at Office 365, and that's going to be having an inherent security layer. You're going to get the Active Directory identity layer as well. In terms of Microsoft's commercial strategy, nothing you wouldn't be surprised about, in the sense that they still use bundles. And those of you who have come from the old world you're going to remember where you were talking about a professional desktop or an enterprise desktop for on-premise technologies, and it was a question of core cal, or do I need ecal functionality? And someone in the market like me would do a tipping point analysis and advise you whether to go core cal or ecal. And if you were going to commit to Windows, commit to Office, then you would look at a platform type bundle. Microsoft have definitely evolved this to an art form over the last few years, and they're moving forward with something called Secure Productivity Enterprise. It's their sort of new cloud-first bundle, and we'll be going into that. But something I did on the prior call was really going into what that was positioning, but very much an Office 365 and Windows 10 with Enterprise Mobility and Security, or EMS suite, bundled together. And I'm going to imagine a lot of customers are going to be moving to this. Microsoft were looking at for around about 450,000 seats across their corporate accounts business in 2016 and 2017 financial year. That's from July going forward. So they'll be looking at around 890,000 at least in their corporate accounts business. So 77% increase there. We've also seen Microsoft take advantage of licensing changes to drive growth without you necessarily having to done anything different in your organization, but just to increase profitability without an explicit price increase. So we've seen that with Windows Server and System Center 2016. When you guys are renewing your maintenance contracts for these products, you're going to be moving from a per CPU model into a per core metric again. Something they did was a great success with SQL, and customers have seen Microsoft's seen double-digit growth on SQL from that move. So expect something similar for Windows Server, and we'll go into the impact for you guys in a minute. Interestingly, on the last investor call, Microsoft actually announced something called cloud profitability metric, with a gross profit margin being addressed to investors. So their investments in cloud are now being scrutinized on a profit basis. So for about every dollar you spend on Office 365, about 50 cents in the dollar is profit for them. So just to give you an idea of what they've actually really achieved. Quite impressive. But have we seen the writing on the wall and how they've achieved that? Definitely. So the reseller channel have obviously been systematically aligned away from licensing to focus more actually on just driving adoption. So trying to, in theory, simplify their licensing models. I use that in inverted commas because of course it isn't any simpler. It is at the surface maybe simpler, but in reality it is not. And all customers come from their own inherent backgrounds that need to be factored in terms of legacy and active contracts and subscriptions, concessions, etc., that all need to be factored in. But in theory there's this focus on realigning their channel, and it's something that you're definitely going to see. So focus on transition to cloud and adoption, less payment for licensing advice, something I would have raised with you guys if you ever met me before. So, if they are paying the channel, it's aligning to their strategic priorities, which are currently Office 365 E5 suite and Azure. Those are the key drivers. Also some considerations around Skype for Business, Cloud PBX plans. Microsoft are also slowly trying to automate their licensing procurement channel with digital platforms and standardization of pricing and discount structures. It's early days at the moment. There's still opportunities for a deal. The enterprise agreement is continuing. There was a plan to implement something called Enterprise Advantage on MPSA, which was moving that enterprise agreement to the MPSA framework for most customers. So anyone, sub 3,000 seats, something like that. Anyone larger, could likely maintain on the enterprise agreement for the near term. That's actually been scrapped. It's been deferred. The enterprise agreement in its current form is continuing, but we'll see. The MPSA isn't going away. It is going to evolve, I expect. I think they're working out how to work this operationally and make sure they have the support of their large global partner community, which are inherently important to success. I was just at Future Decoded. Some of you guys may have seen me there. At least some of you guys mentioned it on Twitter. Microsoft have come to a strategic agreement with Citrix. Always an interesting relationship over the years, but largely they've done a deal. The back end of Windows 10 can be hosted on Azure, with Citrix providing that front-end cloud, the front-end broker to the Azure-hosted Windows 10 service. Obviously, this gives competitive advantage to Microsoft over competitors like AWS and VMware, having a credited full Windows 10 Enterprise Desktop as opposed to a look and feel, which was sort of currently supported in terms of licensing, primarily because of fidelity reasons and Microsoft trying to drive Azure as a strategic advantage. So Citrix, they've actually removed the remote app, and that's going to be replaced with a Citrix sort of agent. Citrix obviously themselves picking up the front end to strategically trying to move their customers over to this platform, and you have the option of either self-managed or Citrix managed service. So really Microsoft have done a stunning job. They've also really engaged proactively with Citrix to get them to have Office Skype for Business working effectively with regards to on VDI. So really they're driving that high fidelity and sort of the issues with latency that have happened previously. So yes, I certainly see this as an advantageous to Microsoft. They own the OS platform. They will be keeping the RDS CAL. It's not going away, sadly. So we'll update you as we get more details, but all the slides I saw had an RDS CAL maintained, sadly. So yeah, they've kept their slice of the pie from a licensing perspective. I will be driving software assurance, I'm sure, as well for Windows 10 Enterprise, very much inherent in the licensing metric these days. We've also seen some quite quiet updates from Microsoft around the fact that Windows 7 driver support will be restricted in the new Intel Kaby Lake chipsets, and also the new AMD that are coming through. So this could drive some of you to assess your Windows 10 upgrades a little bit quicker in your planning. Obviously understand what your device refresh model is looking like in your business, and as you bring in new devices in, are they going to be appropriately supported for Windows 7? You can see Microsoft's obviously somewhat departing from that promise around 10-year support of 5+5 of mainstream and extended support. Really, there's been a tweak here that whilst Windows 7 is supported, there may not be full driver and patching support across new chipsets. A little bit hazy in how that's been announced. Obviously, with the focus on Microsoft focusing Office 365 E5, Microsoft are trying to also position themselves as a telco, and expect them to be talking about cloud PBX and PSTN services for Skype as well. So if you do have some proof of concepts you could look at as part of your wider work streams, maybe worthwhile looking at in advance, and we can factor those into your wider strategic conversations with Microsoft. So a very expansive approach Microsoft is taking right across from desktop OS to productivity, communication and collaboration services, telephony and security and analytics services. So really a really expansive portfolio across the Office 365 services they're positioning at the moment. To give you some more timely updates around the recent news over the last month or so, we've seen Microsoft obviously go to general availability with Secure Productivity Enterprise. So the Enterprise Cloud Suite has been rebranded as Secure Productive Enterprise, SPE, and there is an E3 and an E5 flavor. E3 is what I reckon most customers will be going to in reality, unless they get a chunky discount or there's definitely some proactive work streams around principally Skype for Business Cloud PBX services and PSTN services, or potentially Power BI as the principal drivers, but we'll see. I mean, maybe extensibility and so, the additional features around analytics. But yeah, I mean, it's something I'm expecting primary sales motion to be SPE3 with incentives, additional incentives for E5. Microsoft have quietly announced on January 1st an increase of on-prem software in the UK GBP price list of 13% and 22% for cloud services for commercial customers. They've just made announcements around the NHS pricing as well separately around the new memorandum of understanding that's just been agreed with government, which we'll be addressing separately with our customers on this area. So yeah, very interesting. Microsoft taking advantage of the current sterling price, quite a material increase. There is a huge work stream in our business at the moment to advise customers who have renewals from this point onwards if you've got renewals up until about June next year, if you are looking at doing a renewal work stream, it may be worthwhile considering bringing that conversation forward in your business and working with us collaboratively to drive a early commit renewal prior to the end of December. So we've got about 4 or 5 weeks to get a lot of deals in for customers who are trying to potentially secure December price list for their deals. Microsoft are being inconsistent in how they're approaching this. Some customers are being supported for early commit renewals under December price list, which we now have advanced view of. Other customers, they're perhaps trying to play a game with future price uplifts based on future pricing. But as always, I think you need to take this part of the holistic strategy in renewal, having a clear approach on your roadmap and your negotiation to enable that conversation. But if you can see cost avoidance of 22%, it may be worthwhile having a structured approach to this over the next 4 or 5 weeks, and my consultancy team will be helping customers through that. And we're doing that right now, working on programs to support that. Obviously, we've also seen Microsoft announce Windows 7 and 8.1 went end of sale on October 31st for OEM sellers. So now you'll be buying only with Windows 10 and potentially downgrading still if you need to, using it with but there could be increased costs. I know Dell announced that they were going to charge more to downgrade that as part of the service, but it's currently shipped all with Windows 10 going forward. Microsoft made some small updates, in the latest release for Windows 10 after the anniversary update. That's got a new app guard, which is a virtualized container technology for Edge browser. Quite very interesting. We've also seen Dynamics 365 with a refresh licensing model going live on November 1st in terms of general availability. So there are some licensing changes to hopefully simplify that for customers. It does look quite compelling in terms of how they restructured it. Microsoft also announced a flattening of the Azure pricing. A big struggle they had really was they had the Azure.com pricing, which looked a hell of a lot more expensive for AWS. So every sort of analyst was using that public pricing for comparison, and it wasn't making Azure look particularly price competitive. And as we all know, there's a public price on that portal, but there was a price list that was only available to customers like yourselves through a large reseller like ourselves, where you could see EA pricing, for instance. So what they've really done is they've realigned and harmonized the EA and MPSA pricing, and mixed that with some price cuts on the public Azure pricing, mixed with a harmonization of EA and MPSA. Does this mean you get a worse deal? Not necessarily. It's been kind of harmonized, but there are certainly some pricing advantages if you are looking at either buying pre-compute through your volume licensing agreement, or using the Azure hybrid use benefit, the ability to assign workloads to Azure but only pay for the base compute instance price. And that's something some customers are using. And really that's an inbuilt inherent discount structure that's off price list that could definitely give price advantages to moving workloads to Azure over to, say, competitive AWS infrastructure as a service workloads. So yep, that's something very interesting, and that's something customers should definitely factor into their commercials of any future projects, and we can help you spec up that licensing costs from a license design authority perspective. We've seen also Microsoft raise the minimum commit on this year on their SCE agreement. So this is their primary contract for, say, SQL, Windows Server, and System Center. It also gave you that hybrid extensibility with access to Azure. You could, just have access to Azure. Now there's going to be a minimum commit for any new contracts going forward. But one-time renewal at a lower rate is possible to keep it switched on if you've already got it. Microsoft have got, a minimum billing amount. It's nothing too material, but it's there. Whereas previously it was really basic. You obviously still have access, still have ability to sign up to an MPSA, and have a zero cost set up of the Azure portal on it. But, in terms of the SCE, there's a minimum commit layer there if you're going to spend on that. We've also saw Microsoft in September go live with Azure AD identity protection as part of the AD Premium Plan 2. Also, that's going to be sitting with EMS E5. Really, this is Microsoft stepping into sort of identity analytics in terms of conditional access policies. And that can be really, really quite powerful. That went live, and that's aligning with that secure product to the enterprise and the associated E3 versus E5 packaging of their software licensing. So yeah, kind of a brief update of some of the key things that really come across. What does this really mean? Well, under current pricing, if you signed a contract 3 years ago and you were to say sign a deal today for exactly the same quantities, no changes, the price increases and the licensing model changes could, not factoring in discount, you could potentially see an 18% uplift in spend. This isn't for all customers. It will vary on your own individual scenario. But if I just aggregated some of the increases across a pool sample I took, most customers were looking, just exact like for like, with no growth, no new technology, would exactly the same static. We could potentially be looking about 18%. Interestingly, once you factored in customers who actually accounted for their compliance and what they'd actually deployed over that period since their last contract 3 years ago, so that could be factored in everything from growth to new technologies being deployed to lack of controls around SQL or Project and Visio in their environment. There's committed technologies. Some customers are potentially looking at 59%. You actually look at the technical reality, what I call the technical baseline of things they've committed to, things they've already deployed, that current state reality. So, I sanity check this, and, it's not unfeasible. If you're spending £1 million a year, you could be looking at 1.6 million per annum at renewal, just for your current state, and that's not necessarily planning for potential investment in new technologies that you perhaps haven't factored in. We've obviously just addressed the fact that we are expecting to see a 22% price increase. So really there's a compelling event to be very proactive around optimizing not only your licensing, to look at your bill of materials closely and your investment plans to see how that will align with your budgetary pressures and objectives of your business. It's balancing enabling your business with cost reduction. So we're very aware of these drivers, and we work a lot, spend a lot of time with customers to try and achieve the outcomes they require. Once we've done all this work, we're saving customers generally 35 to 40%, but you have to factor in, some customers might see revenue neutral, some may see cost savings beyond what they were spending previously. But generally, if you're seeing uplifts, you've got to factor this in realistically into your strategy going forward. I wanted to flag up Windows Server as well. Every renewal from now onwards, for any maintenance you have on Windows Server and System Center, will potentially have an increase. If you're moving to a per-core world, for not all customers, won't necessarily material increase. Could be 22%. It depends obviously on your ESX virtualization and whether or not you've invested previously in higher core density data centers and you've got a number of ESX hosts. It depends on that consolidation exercise you've done. But in principle, it could cost you somewhere between 10 and 22% more. So look at what your current spend is on Windows Server, look at what 10 to 22% uplift would look like, and just get a feel for what material increase and do you need to plan around for that. There's definitely opportunity to secure something called license grants. It's something we did back in the day for SQL, back in April 2012 time, where renewals was the opportunity to identify servers above 8 cores. Well, now it's the opportunity to identify servers in excess of 8 cores per CPU and secure a license grant, so you're not paying for that shortfall in licensing. You'll be renewing at that higher rate, but at least you're not paying for the license, and that could save you about an average 4K per effective server if you do that. Not necessarily a discrete project, but it's something I would certainly wrap into your renewal program and show that back to that business that you've identified and secured those savings for your business. And it's also a great opportunity to save money through identifying easy candidates for consolidation or secure decommission. So yeah, lots of factors to drive cost technologies emerging. So there's a real opportunity to drive value for your business, but also you need to carefully plan to mitigate potential cost increases as well. So in terms of my recommendations, understand where you are today. So current state deployment is always key. You can work with us under NDA on that. So understand what is actually changed since you signed that last contract. If you've got very good sound processes in place, fantastic. You can factor that in today. If you need some help with it, we're happy to do it as well. Running the best practice tooling we can and optimizing your license assignment against that footprint. As I always say to customers, you can throw licenses at a problem, or you can be smart about it and how you assign them, and it can have a real material difference to how much a compliant environment actually costs you. We do work streams with customers to help them assess their roadmaps, and obviously it will change over 3 years quite materially. Some customers on this call I worked with some years ago, it's quite a different world in a Microsoft roadmap perspective, and a lot of changes happened in your respective businesses. So if you can update that for a technical baseline based on not only where you are today technically and technical reality, but also where you're going in terms of committed technology and deployment roadmaps, we can really get that view. Then really it's over to us. We can help assess and optimize that licensing bill of materials, assess various investment models and sourcing options, and give you that clear commercial forecast with principal recommendations, so you can lead that engagement with Microsoft as opposed to just being reactive. I don't think negotiation is a dirty word. I think it can be a win-win for both parties. We do keep Microsoft happy, but also achieve what you guys need to achieve for your business. And it's about transparency and being clear on what we're trying to achieve for you guys as a business, and really do it. We can obviously have a look at any offers and concessions that need to be factored in, because not everyone is vanilla. And yeah, so please do get engaged. If you have got a renewal coming up anytime between now and June, please engage with us now, and we can do a discreet consultancy engagement to help you guys. We're doing a lot of work streams at the moment with various industries and businesses, so it's exciting times. There's a lot of compelling events, not only from a technology perspective, but also from a pricing perspective, to really drive a proactive approach to your Microsoft renewal strategy. So that's kind of me in a nutshell for now. We are due to do a follow-up in January, but if you want to speak to me between now and then, please don't hesitate to get in touch. My email address is there. We can see how we can potentially help you guys between now and your renewal. We're expecting a huge uplift in engagements with our customers, working on discrete engagements on this, because there's a lot going on. So thanks, guys. Thank you for taking the time. Just done it in about 40 minutes of a 45-minute slot. Please don't hesitate to get in contact with your account manager at SoftwareONE, and my email address is obviously there. You can follow me on Twitter for daily updates, and also I periodically update to my blog with a monthly update as well at microsoftlicensereview.com. Cool. Thanks, guys.
Thank you very much, Tony. So as confirmed at the beginning of the webinar, what I'll do is send around a copy of the slides, and indeed we've recorded the session so you can review back. As Tony says, for any further information, do feel free to contact Tony directly or your SoftwareONE account manager. So thank you very much for joining us. Hope it's been a useful time for you, and we look forward to seeing you again on our January session. Cheers. Bye.